Hi, grade 11s. I'm this Mr. Chage. In this morning's activity, we're going to be dealing with a selling of an asset where there is a trade in. I promise you, it's not really that different from what we did when we were doing the selling of an asset when there is no trade in. Just some smaller difference. And I promise you that at the end of this lesson, you will have a much better and improved understanding of asset disposal. So here they're saying that on the 1st of March 2020, the following balances appeared in the records of Norway traders, and then opening balance for our vehicles was 264,000, and for our accumulated depreciation on vehicles was 86,000. So here what you need to do, the first thing that you must do, make sure that you enter your information in your ledger accounts. Remember, the transaction says that we are required to do it's supposed to be vehicles here, where we are required to do the vehicles account and also the accumulated depreciation and asset disposal. When you see this, you should not be worried, because just know it's going to be a walk in the park. Okay, so the first part of earning your marks is when you start with your opening balances. So we are going to do that. So remember, our year starts on the 1st of March 2020. So I'm going to do that here. So remember that our opening balance, when we do it, we are going to say 2020 March, and then the first, and then we'll have our balance brought down according to our information. Our balance brought down is 264,000. So we start with that balance brought down of 264,000, and then we are done with the first part. And also we must check if we are required to do accumulated depreciation. So it's required. So we're going to say 2020 March the first, and then we have our balance brought down, and according to our information, our balance brought down is 86,000. So we'd have that 86,000 here. Okay, then we have already gotten 2 marks for doing this. And then the next part of the question says that the following transactions took place on the 1st of October. So remember, these are your opening balances. So it means that these transactions were not included on what you see in the opening balances. So they say that the following balances took place on the 1st of October. Number 1, a delivery of a vehicle was purchased on credit for 150,000 from Raborogo Traders. And then secondly, an all delivery vehicle was traded in at Raborogo Traders for 51,000. The original cost price of the vehicle was 84,000, and it was bought on the 1st of January 2018. Okay, so this is what we are going to do, guys. When you deal with such an activity, number 1, because here they are saying that they sold, it is the easiest thing that you can record. Okay, so because they are saying that they have sold, this is what we are going to do to earn our marks. On the 1st of October, we are going to record this purchase. Remember, they said they bought on credit, so we're going to have October 2020. So under our account here, we're going to say 2020 October the 1st, and then because they bought on credit, we're going to write creditors control. Okay, and then under folio we're going to write our CJ. Let me just erase so that it can be clear. So under our folio we're going to write CJ, because this was bought on credit, and remember they said it was bought for 150,000. So you can just record that 150,000, and then once you are done with this, you also record the disposal, because they said they disposed. So we're going to say 2020. Remember, the disposal also took place in October, so we're going to say 2020 October the 1st. Then we are going to have, remember, when we sell an asset, we say debit asset disposal and credit our asset account. So in this case, remember, our vehicles will increase when we buy, and then they will decrease when we sell. Remember, they decrease on the credit side, and then when we sell, we relate this to asset disposal. Okay, so which means that the name of the account that I'm going to write when we sell is asset disposal. So we are going to come here and say asset disposal. And then general, we need to check what was the cost price of that asset that they are disposing. Remember, they said the cost price of that asset was 84,000. So that 84,000 will come here. Okay, and then once we are done with this, we are able to do our totals at the end of the year because nothing else happened. Remember, you need to record the movements in terms of your cost price, and then after also record in terms of your accumulated depreciation. So we are going to say 264,000 plus 150,000, and then it is giving us 414,000. So we have 414,000 here. Remember, it is the bigger side, so we also have 414,000 here. Now at the end of the year on 28 February 2021, we will come here, would say 2021 February 28, we'll have our balance carried down, which will become your on 2021 March the 1st, it will become your balance brought down. And according to this, if we say 514 minus 84,000, we are left with 330,000. So our balance carried down will be 330,000 and also brought down 330,000. And then by doing this, you are already done with your vehicles account. So remember, you already have your marks on the ledger account. Okay, and then once you are done with this, what you can also do, you are going to go to your asset disposal account. Remember here, you see the word asset disposal on the vehicles account on the credit side. So it means this side, when I come and record, I'm going to record on the debit side. So I'm going to say 2020 October the 1st, then we're going to write the name of the contra account, which is our vehicles, then general, then the cost price is 84,000. Then you already earned a mark on this. Okay, and then also what you can also do before you start to struggle with your depreciations, make sure that you check when was the new asset bought. Remember, your depreciation is normally divided into SAN, your sold, old, and new. Okay, so let's check in terms of the method of depreciation. So here they're saying depreciation is calculated at 15% using the cost price. So this is the easiest. Once they say they calculate depreciation using the cost price, you are not going to stress. Let's check. This asset that we bought, they said it was bought on the 1st of January. You need to do what you call a fixed asset register, because they did not tell you that when they bought it, what was the when they sold it, when was at the beginning of the year when they sold. When we started our current financial year, they didn't give you the accumulated depreciation of that asset at the beginning of the year, so meaning that you need to calculate it for yourself. And remember, it was bought in the year that ended the 1st of January 2018, so it means it was with us for only 2 months in that particular year. Okay, so we will do that fixed asset register here. So do the fixed asset register, and then remember, it has got a number of columns. It has got a column for cost price, here for the date, and then depreciation, and then we would have our accumulated depreciation, and then we'll have our carrying value. Okay, so now remember, cost price won't change. Your cost price was still 84,000, right? And then this date when you bought it, your year ended on 28 February 2018. How would you get? Now in that year, you only had that asset for 2 months. So let's check. You only had it for January and February, because they said it was bought on the 1st of January 2018, so it was with us only for January and February, so that's not a problem. So when we do our calculation for that, we are going to say, remember the rate that they spoke about. They said the rate is 15% using cost price, right? So which means that when you do your calculation, you need to use the add. Remember, amount, rate, and time. So when you do the calculation, we are going to say 84,000 multiply by 15 divide by 100, and then multiply by 2 over 12, because for that time it was asked for only for 2 months. So we'll say 84,000 multiplied by 15 divide by 100, and then multiply by 2 divide by 12. It is giving us 2,100. So the cost price of that asset for that year at the beginning was 2.1, and then also accumulated at the first year will be the same. So if you say 84,000 minus 2.1, it's going to give you 81,900. Okay, now let's go to the year that ends in 28 February 2019. Remember, here it will be with us for the entire year. So when we do the calculation, we're going to say 84,000 multiplied by 15 divided by 100, and then multiply by 12 over 12. Okay, so 84,000 multiplied by 15 divided by 100, and then multiply by 12 divided by 12. It is giving us 12,600. So for the second year, depreciation for the year will be 12,600, and then 12,600 plus 2.1 is going to give us 14,700. So our carrying value will be 84,000 minus 14,700, which will give us 69,300. Now remember, the year that we are in ends in 2021. So for this year, we would have 28 February 2020. For the year that will end in 2020, depreciation for the year, because its cost price is still going to be the same, so we'll have 12,600, and our accumulated will be 14,700 plus 12,600, which will give you 27,300. Now let's check our carrying value. Our carrying value will be 4,000 minus 27,300, which will give us 56,700. Okay, so let's check. So remember, even if you say 69,300 your carrying value, and then you subtract depreciation for the year, which is 12.6, it should still give you the same 56,700. So our information is corresponding. Now on the year that ended 28 February 2021, something different will happen here. So let's check, when was this particular asset sold? This asset, they said it was sold, they sold it on the 1st of October. So meaning that this asset for the current year was with us only from March up until the end of September, because remember, it was with us for March, April, May, June, July, August, September. So it's 1, 2, 3, 4, 5, 6, 7, because it was sold in the 1st of October. We can count the first. So 1, 2, 3, 4, 5, 6, 7. So we are going, when we do the calculation, we are going to say 84,000 multiply by 15 divided by 100, and then multiply by 7 over 12. Remember, it's going to be March, April, May, June, July, August, September. So let's see. So 84,000 multiplied by 15 divided by 100, and then multiply by 7 divided by 12. It is giving us 7,350. So our depreciation for the year will be 7,350, and then remember, our accumulated will be 27,300 plus 7,350, which will give us 34,650. So our carrying value will be 84,000 minus the answer. It is going to give us 49,000 350. So let's check our information. Remember, our depreciation for the year for this sold one is 7,350. So we have that 7,350. Then we must also calculate the depreciation for the new one. Remember, when was the new one bought? The new one, according to our information, it was bought on the 1st of October, and it was with us from October up until the end of the year. So it will be with us from the new one. Remember, it's going to be October, November, December, January, February. So October, November, December, January, February. It's 5 months. So we're going to say 150. Let me just confirm if it's 150. So we're going to say 150,000 multiply by 15, divide by 100, and then multiply by 1, 2, 3, 4, 5, multiply by 5 over 12. It will give us the depreciation of the new one. So remember, we're going to say 150,000 multiply by 15, divide by 100, and then multiply by 5, divide by 12. It is giving us 9,375. So we have that 9,375. Now let's look at the depreciation of the old ones. Remember, the old ones, when we started the year, they told us that the old ones, the total accumulated depreciation amounted to 264,000, right? So in this 264,000, we need to subtract the 84,001 because it is still there. So 264,000 minus 84,000, it is going to give us 180,000. And then remember, these old ones, they were with us for the entire year. So our depreciation will be 180,000 multiplied by 15 over 100, and then multiply by 12 over 12. This one, remember, it will not have residual value because the accumulated and the cost are too far from each other. So if we say 180,000 multiplied by 15 multiply by 15 divide by 100, and then multiply by 12 divide by 12, it is giving us 27,000. And you can see, if you take your 27,000 and you add your accumulated, it won't even reach closer to that can value. So now our total depreciation for the year is these three items, guys, for our assets. Remember, we only have vehicles, so this is what we are going to include. So our depreciation is going to be 7,350 plus 9,375, and then plus 27,000, and then our total depreciation for the year will be as follows. So let's see, 7,350 plus 9,375, and then also plus 27,000. Our total depreciation for the year is 4,375. 4,375. Then this is the depreciation that we are going to include here in our accumulated. So remember, we're going to say 2021 February the 28th, and then we're going to say depreciation because your accumulated is increased by your depreciation. Remember, the journal entry will be debit depreciation, credit accumulated depreciation. So this one increases on the credit side and it decreases on the debit side, and it will only decrease when we sell. So in other words, remember I said when you sell, you relate that to asset disposal. So we'd say 2020 October the 1st, and then we'll have asset disposal, and then general will look for the information after. So remember, our total depreciation for the year was 43,725. I hope this makes sense, guys. Now when we sell, we need to go back to our information. Remember, your information must correspond, guys. So we are selling, let's check the one that we are selling. What is the accumulated at the date of disposal? According to this, the total accumulated depreciation is 34,650. Remember, this one was with us only from here. You can just write up until the date when they sold it, but I was just reminding you that this is the financial period that we are at. But the accumulated depreciation at the date of disposal is 34,650. So that 34,650 is going to come the site 34,650. Remember, we have debited, so when we go to asset disposal, we must credit. So you are going to say 2020 October the 1st, then we are going to write accumulated depreciation. Remember, it's vehicles, not equipment. Here they made a mistake, it's vehicles. Okay, and then that accumulated depreciation is 34,650, and then let's close off our accumulated depreciation account. So remember, the bigger side will be the credit side. So if you say 86,000 plus 43725, it's going to give you 129,725, 129,725, and then we'll also have 129,725. Okay, and then when we take this let me check something. Okay, so when we take this 129,725 and then we subtract 34,650, it is going to give us 95,075. So we are going to come here and say 2021 February 28, our balance carried down was 95,075, and then this will be our opening balance for 2021 March the 1st. Our balance brought down it's 95,075. okay, and then you are done with this. So we need to go back to our asset disposal and check how was that asset sold. Okay, so according to our information, they said it was traded in. When they trade in, the contra account that we are going to use is creditors control. So remember, we are saying the general entry will be that you debit. Remember, when you record, you need to check which account are you going to debit, which account are you going to credit. So if we are, remember, here we'll have the debit balance, and then we have the credit balance. The proceeds, guys, how you sold it, come the side always. So it means when we record, we will say debit creditors control, and then we credit our asset disposal. Okay, so that's why we are writing on the credit side. So we're going to say 2020 October the 1st, then we have creditors control. Okay, and then general, they said it was traded in to the value of 51,000. So we'll write 51,000 here, and then we will need to determine if it was sold for at a loss or at a profit. So when you balance between the two sides, if your cost price if the side becomes high, it will mean it was sold at a profit. So let's see, 34,650 plus 51,000, it's 85,650. So the credit side is the biggest, so it means we will have a balancing figure this side. So we can just use the same date, 2020 October the 1st. We'll have, remember, if the credit side is more, it means it was sold on a profit. So we'd have profit on sale of asset. Okay, then let's check that. Remember, the total is 85,650, 85,000, 650. So if you take it and you subtract 84,000, it's going to give you 1,650. And we can confirm if this is right. Are we together? So remember my workings, I did them somewhere. I did not need to do them here. So these workings that they want here, we did them here because I wanted to explain clearly for you, and these are the workings that they wanted. So let's check what was the carrying value of an asset at the date of disposal. Our carrying value according to this, it was 49,350. So our CV was 49,350, but our selling price was 51,000. So let's check 51,000 minus 49,350. It gives us 1,650, which is our profit. Okay, so let's check in our ledger account that 1,650. Here it is, profit on sale of asset. Thank you so much, guys, for watching. If you want me to become your online tutor, you are more than welcome to get in touch with me by using the details that are available in the description of this lesson. Thank you so much for watching. Remember that our lessons start from just 500, and from there your academic problems of accounting will be a thing of the past. Thank you so much for watching. May God richly bless you. Shalom.